And, well, no surprise here, but what's going through their heads, their collective brains, if you will?
Thank you so much for having me on. I think that the RBA is a little bit concerned about the potential for inflation to have a resurgence, which is why they still maintain their tightening bias. And if we think about the risks to inflation over the next 6 months, there are still some significant upside risks, particularly to wages growth, because we've seen that enterprise bargaining agreements, which are a type of agreement in Australian wage setting systems, have actually been rising at quite a fast pace, above most economists' expectations over the past month or so. And the risk about a resurgence in inflation due to higher food and oil prices, which is impacting higher petrol costs. I think this increases the risk that we may actually see another RBA rate rise before the end of this year.
Yep, we're getting some more lines in this statement now, Deanna. Inflation still too high, as you talked about, will remain so for some time. Returning inflation to target remains the priority. Inflation in Australia, though, has passed its peak. They're taking a look at the economy, still experiencing period of below-trend growth. We'll do what's necessary to bring inflation to target, but they still see that 2 to 3% target range for inflation in late 2025. Uncertainty around China, the economy outlook due to property. So they're still talking about the significant uncertainties around economic outlook. So it seems like they're leaving the door open at least for another hike this year, Deanna. I'm just wondering, how much higher can rates go in Australia now?
Well, I would have said that they wouldn't be able to have gone much higher than where they are at the moment, given that Australian household debt to income levels are at a record high, and Australian interest rate sensitivity that households have to mortgage rates is one of the most sensitive around the world. But if we do see a renewed spark in wages growth and an increase in inflation again, which means that the RBA will miss its 2 to 3% inflation target for longer than they're currently forecasting, then rates could go up another 25, 50 basis points from here quite easily, I'd say, to be more in line with some of our global peers. It's not our base case right now, but it is a risk over the next few months.